We're going to talk about the topic of 2020, which was Zilliqa on my channel, and we're also going to talk about Coinbase and why it has suspended XRP. So hi everyone, welcome to the channel. If you are new, please do subscribe, hit that bell button, like, and leave a comment. Hope you're well. So first things first, we need to talk about it, don't we? Coinbase has and will suspend XRP trading following the SEC lawsuit. Now, I'm very vocal in terms of my situation with XRP. I was a holder, I dumped it a few months back due to the fact that I wanted RSR, I wanted reserve rights, and I thought the capital in my XRP bag was profit was good enough for me to get rid of and go with something more undervalued, right? In terms of the market cap was a lot lower, you know, overall the situation of the development was a lot different. So I was happy to do that and to move on and to then potentially get more value appreciation. Overall, that seems to be a very wise decision, I must say. But we need to look at this. The problem with crypto is centralized exchanges will suffocate the living shit out of this, I think. Whether it's good or bad, and I've always said and maintained I like XRP in terms of its use. It is fast, it is free friendly. You know, it is quite good to move stuff around, but there's always that past little demons of, is it a security? How was it done correct? Was it done correctly in terms of the application, the distribution, and most importantly, the marketing of it? That's what the questions are. Not to mention the two executives that are involved in this, the profit that they've made, over 600 million. So there's all kinds of unanswered questions that do need to be resolved, and ultimately for me, it's definitely a no trade zone. It's definitely not worth an investment at the moment. Even if it does look undervalued, just wait and see what happens. This could drag on for a while, and that suffocation of, let's just say Coinbase, obviously, huge volume. There's obviously BitHub, there's a few others out there, Bitstamp. A lot of exchanges have commented and said they will look at it and also already have acted upon delisting. So American exchanges definitely probably will be delisting it all the way, but this is a worldwide, it seems to be a worldwide exclusive in terms of, yeah, XRP binned off Coinbase for the temporary kind of situation of this. So be careful. Right, with that said, let's talk about Zilliqa. Now, again, if you missed out, apologies. I spoke about this in May, April time. Did a lot of videos covering why I like Zilliqa, why I'm buying Zilliqa, why I rate it, and it has came to huge fruition. And what we're going to do in this video is we're going to do a top to bottom analysis on the best price data chart we can get, the Huobi chart. Now, this is a tweet here, this is from the 4th of December, the status update on the Zilliqa Ethereum bridge. Now, how this is going to work, it's going to use the Ethereum sort of network, and it's going to link together with Zilliqa network using the Binance stable currency and on Binance essentially. It is also looking to do a poly network layer as well, as you can see here. And what this is going to do is allow people, if they want to trade ERC20 tokens on the Zilliqa framework essentially, which has sharding live, which has better fees, and most importantly, scalability issues resolved due to those both there. Now, with that being said, it has done very, very well, as you can see here on the chart. I'll just remove that. Now, that being said, I rate Zilliqa, and I always have. I think the framework that they've got with the sharding is really good. They've got their own decentralized exchange. They've got their own ecosystem with big companies backing it, the likes of the Singapore dollar. The whole Singapore network of the blockchain, which is pretty heavy and big, is pretty much on the Zilliqa platform. They have companies on there. They have all kinds of informational kind of resources on there as well as all kinds of engagement bots in terms of on Telegram, use cases, all kinds of good stuff happening, and also, most importantly, new exchange listings. So it's doing well, you know, it's doing well, it's got the interest now, but I think what is going to make this go even further is the relationship with Binance using the stable currency on there, and obviously that Ethereum bridge is going to make a big difference. But you got to look at the past. What has Ethereum done to improve? Well, they're still building, they're still, you know, that problem that they've had, whereas Zilliqa is in that framework essentially that would work very, very effectively and very, very good. Not to mention the staking model. The staking model and the tokenomics of Zilliqa is brilliant. It's still 16% return of investment in terms of per year at the start, as it is right now. So how that works is the more that's locked up, the less that will go. But the more tokens that are locked up obviously create a supply shock, which will obviously make it more scarce and a better asset. So shall we have a little look at this? Now, it's going to be interesting. It's going to be very, very interesting to see how this actually does work, because this is blind. This is blind analysis in terms of resistance levels. And I've already spotted one through the naked eye, essentially. If you're looking at like a top to bottom analysis of this entire framework from the bottom to, you know, where we are right now, we've literally slapped this level here. And this is going to be basically the basis of the analysis, because there's no real point going too balls deep into this, but we've got to respect certain levels. Obviously this 14 cent level here, simple really when you think about it. Overall, the 618 of that entire move, it's a monster retracement and a monster pullback. But you've also got to look at this level here. I think 11 cents is also very, very important. The reason why I'm saying that is because, well, it's kind of obvious in my opinion when you look at this level, because what's going to highlight very, very soon on this level, I'll make this one a bit bigger too, is the element of where things have turned around and stopped. They've candle there on the weekly time frame, and obviously it carried on. But you've also got this top level here. This top level, vitally important. And yeah, there's all kinds of situations here where you can look at all this situation where this stopped and turned around. It's where that candle opened. It's where this body closed. It's very, very important, especially when you look on the weekly time frame and pull it across. So that being said, we've had the run up to the first level. The first level. Where do we go next? Well, oops. I do think we're going to go a bit further, in my opinion. I think we're going to go a lot further. That's my overall opinion, not financial advice, of course, due to the developments, due to the momentum. And we just got to be very, very careful and savvy with all these sort of situations. Now, when we start to like peel back the curtain a little bit and go down to the daily time frame, and we look at the past, we respect the past, and we have a little look. If we look at where it's been, you can see here why these levels look very, very important. As you can see, this level here, where it stopped and turned around, it was resistance, it failed, it broke down. This then became support, it broke down, came back up, failed, held a little bit in and around this region for a few days, and then rejected. And then this has become a major resistance level in the past where we are right now. So this level where we are right now, in terms of the grand scheme of things, in my opinion, is so important to break through, which will obviously give us bearings of where we can go after that, which should obviously, in my opinion, 11 cents, then potentially up to 14 cents, then who knows, could get into some interesting territory. But what we need to find out as well is where are the extension targets from this entire level. What I do think though long term, and I've mentioned this before, what I think overall, I think like when you look at the weekly time frame in terms of this retracing, it's very, very interesting, it's very, very good. And what we could look at here on the weekly is probably, if this is the top, it's not too far away from where those levels are. And I think this one is where you start looking left, and you've just got to be careful. Daily time frame for me as it stands, just kind of proven it's not the easiest thing to look at when it hasn't pulled back. But if this is the top, and we could program this as a potential top for now, we may well find that, well, that 10 cent level essentially is a potential ceiling, but we could be looking at potential levels in and around where, you know, you could probably argue maybe in and around where this level is. But when you look left and you start programming these in, look at where this body is closed before in the past. It's in and around that level. That could be a monster level from the past, but you've also got this level here where there's been wick closures and all kinds of stuff. So for me, if you're looking long term and you're looking to buy the dip, these are probably the two places to look at. If it happens, there's a lot of momentum, a lot of alt season kind of ramblings right now. So that's something to look at in my opinion. But for me, looking at that overall, it's a very, very interesting chart. For me, that is what I believe. And what I think overall, look at the confluence. I could basically state to you guys that, yeah, it could hit this level here, but when you start putting the Fibonacci on, look at where this target level is on the extensions. That isn't far away from that weekly level, that huge weekly 50% marker, which is around there. So you could probably argue, well, maybe we can delete that and do this and go, right, well, this is a potential target area. Cool. That could be a level there. You can maybe go, well, actually, that is a 618, but actually, this has actually got better bearing because this has got wick closures. That looks a bit neater and tidier. I can maybe go for that one. Neaten up the entire chart, neaten it all up, make it nice and easy, and I'll show you exactly what I do on the Fibonacci in a second if you stick around. So, oops, 618 levels. So that could be the basis of it, and this is obviously a level of resistance, which is obviously, yeah, you know, something to kind of keep an eye on. But you can maybe make that a little bit neater, tidier, whatever. Then it's kind of in that kind of situation. But for me, fundamental wise, I think these levels are pretty much going to happen at some point in and around the resistance of this push, but this could be a perfectly primed kind of opportunity, but depends. It might not even retrace that far. It might do a 22% kind of move, which we're not that far away from, just to kind of put it out there. If I just put the 22% on, 23.6%, we've pretty much wicked into it. So that could be interesting to look at. So anyways, in terms of how I set this up, I put a minus 0.618 and a minus 0.27, which give me the basis of extension levels. These are key fundamental extension levels in the Fibonacci. Essentially with the sequence, what we're looking for is a pullback into a level of demand, which we've got highlighted structure in the past here. And most importantly, this is where we could get sent to the top side, which could actually be the next leg up. And if you remember on Twitter, I did a tweet about this similar sort of ilk, where it actually flew way higher than I expected. It was on this previous level and it flew. And obviously where we've been, the target level was actually 5 cents. It actually went up to 10, which is crazy. But that could be the next long-term play. And I know it's a bit scruffy getting there, but just to show you the resistance at the start was kind of more important. I can maybe paint this one a little bit more red to kind of indicate that this is, you know, a resistance level. Maybe a good idea to save that one. No, you don't want to save. Strange. But anyways, hope you enjoy that video. Obviously a little bit of technicals. For me, Fibonacci is king. I use it an awful lot, especially on the weekly time frame. It is really, really handy. Obviously, if we're looking at price targets, you know, you got to look long term. For me, that swing looks very, very valid, but just be careful that we've already might have retraced. We might have already done it in the 23% level. So just be careful.